Working capital is a terminology for the money you need while you wait to get paid. For instance, let us say we are into this milk delivery business. Every day we go to a milk farm, we collect milk and then deliver it to our various customers. We pay the farm in the beginning of the month and we collect the payment for the supplies for all the customers at the end of the month. So you see there is a latency in between. So this short-term funding that is required for paying the farm is called as a working capital. But did you know that the biggest and the most volume trade which is happening every day is actually temporary dollar borrowing? Dollars are borrowed anywhere between a few hours till 90 days. And this trade usually happens in what is called as a shadow banking. Shadow banking is a very important concept because if we want to understand as a retail investor why markets crash unanimously, irrespective of their asset class, why FX markets will also crash, why gold and other precious metals also crash, while oil is also crashing. For all these answers, we need to really take a look and understand the concept of shadow banking. Stay tuned.
You know, every single day, there are trillions, and I mean trillions of dollars moving around the world. And it's all happening through this massive, kind of hidden financial system. It's like this invisible engine that makes sure your ATM works, that your online orders actually show up at your door, and that the whole global economy just keeps chugging along. But what is this thing, and why is it so incredibly important?
Well, it's got this name, shadow banking, which, let's be honest, sounds a little spooky, doesn't it? It kind of makes you think of back alley deals or something, shady. But the reality, it's way more practical and, frankly, way more important than that.
Okay, let's just dive right into this. Forget the scary name for a second. A much better way to think about this is like the working capital oxygen for the entire global system. It's the super high-speed financial plumbing that handles all these incredibly short-term money needs. And when I say short-term, I'm talking about everything from just a few hours overnight to maybe a few months.
To really get your head around why this system even has to exist, let's look at 3 super common, everyday problems that, believe it or not, our normal banking system is actually pretty bad at solving by itself. So let's start with something we can all relate to, right? Getting cash from an ATM. Imagine a huge bank, like an HDFC. All day long, millions of transactions are flying around. People are withdrawing cash, making deposits, swiping credit cards, you name it.
So at the end of the day, the bank tallies everything up and realizes, whoops, we're short, say, $300 million just to settle our books for the night. Now listen, this does not mean the bank is going broke. It's just a timing thing. More money happened to go out than came in during that specific window. But if they don't get that cash, payments could start failing, and yeah, in a worst-case scenario, ATMs could actually run dry. And that leads to the really obvious question, right? If a giant bank just needs some cash for a few hours, why can't they just pop over and get a normal bank loan? Just tuck that question away for a minute.
All right, on to problem number 2. Picture this. A big electronics store in Dubai wants to order the brand new iPhones. We're talking a $20 million order placed directly with Apple.
So here's the jam they're in. Apple totally reasonably says, look, we're not shipping these phones until you pay us. But the store in Dubai doesn't just have 20 million bucks sitting in a checking account. They need to get the phones first, sell them over the next 2 or 3 months, and then they'll have the money. It's a total catch-22, and if you think about it, this kind of problem could bring global trade to a screeching halt.
And again, you have to ask the same question. Why can't that store just walk into their local bank and get a standard business loan to pay for the shipment? What's the holdup?
Okay, our third and final problem. This one involves a huge Indian company. Let's just use Reliance as an example. They need to buy $1 billion worth of very specialized machinery from the US, and the payment is due in 3 months.
Now the company has the money, but it's in Indian rupees. Converting $1 billion is super risky. If the exchange rate moves the wrong way over those 3 months, they could lose an absolute fortune. They don't want to buy dollars forever. They just need to borrow them, to kind of rent them, for 90 days to get this one deal done.
So, for the last time, why can't they just go to a bank for a simple loan? The answer to these 3 questions? Well, that's the entire reason shadow banking even exists. Okay, so now let's flip the script and look at the solution. This is where we connect all those problems to some really elegant answers
and see how this invisible engine actually works.
Remember that bank needing cash overnight? Well, a conventional loan is just way too slow. It means filling out applications, doing credit analysis, waiting for approvals. That could take days. By then, the problem's already a disaster. The shadow banking system, though, it provides an instant, totally automated overnight loan. It's like a temporary bridge that makes sure the financial system keeps running like clockwork.
And the scale of this supposedly simple solution is just mind-blowing. The market that handles these overnight loans, it's called the repo market, has something like $15 trillion flowing through it. Not per year, per day. I mean, to put that in perspective, that's more than the entire yearly economic output of China. It's bigger than most of the world's stock markets combined. It's just massive. Okay, so what about those iPhones stuck on a ship somewhere? Again, a traditional loan is too slow, too rigid, with weeks of paperwork. But the shadow banking system has these amazing purpose-built tools like standardized letters of credit that are designed to do one thing and one thing only: solve this exact problem in global trade. They guarantee the payment so the goods can ship right away. Problem solved.
And this market for trade finance, the one that keeps global supply chains moving and our store shelves stocked with stuff from all over the world, it's a colossal $9 trillion a year operation. And a huge chunk of it runs through these specialized offshore channels.
And finally, our Indian company that needed to rent those dollars. A conventional loan doesn't actually solve their biggest headache, which is the currency risk. But the shadow banking solution is a brilliant little thing called an FX swap. Think of it as financing and insurance all rolled into one. They get the dollars they need today, and they lock in the exact exchange rate for when they swap back in 3 months. The currency risk? Poof, gone. Okay, get ready for a truly insane number. The market for these FX swaps is, you could argue, the biggest shadow banking engine on the planet. Its outstanding notional value is around $100 trillion. It's not really a market, it's an ocean of synthetic dollars created completely outside the traditional system.
So it's pretty clear this system is incredibly fast, it's absolutely massive, and it's essential. But, and this is a big but, there's always a trade-off. So let's put it all together and look at the whole picture.
Probably the most important thing to remember comes from this quote right here. This system is plumbing. It's the essential, behind-the-scenes infrastructure that makes all of modern finance even possible. We're not talking about a bunch of shady loan sharks. We're talking about a set of really high-speed, powerful tools. This table really sums it up perfectly. On one side, you've got conventional banking. It's slow, but it's pretty transparent and regulated. On the other side, you've got shadow banking. It's instant, it's super efficient, and it operates on this unbelievable global scale. And that is the fundamental trade-off. We get all this incredible speed and efficiency, but in exchange, we take on risks that are hidden deep down inside the plumbing, interconnected in ways that are almost impossible to see until something breaks.
Look, if you remember just one thing from all of this, let it be this. Shadow banking isn't some weird alternative to regular banking, it's a consequence of it. It exists for one simple reason. The modern global economy moves at a speed that traditional regulated banks were just never designed to keep up with.
Which leaves us with one final and really critical question. This system is hyper-efficient, sure, but it runs on trust and collateral, not on government-insured deposits. It's unbelievably powerful, but it's also incredibly fragile. So, what happens to all of us when this giant, invisible plumbing system finally breaks?